And gold has fascinated humans for thousands of years. From ancient kings to modern investors, everyone wants a piece. Its shine promises security, wealth, and status. But in today's economy, can gold still make you rich? Or is it just a shiny relic of the past, valued more for tradition than profit? In this video, we'll explore gold's history, its role in modern investing, the risks, the alternatives, and whether it's still a path to financial success. Stick around. By the end, you'll know if gold deserves a place in your portfolio. In ancient times, gold was more than money. It was power. Pharaohs of Egypt adorned themselves with gold. Rulers hoarded it to show status, and entire wars were fought over it. People traded gold for essentials like grain, livestock, or tools. Its rarity and beauty made it universally trusted, unlike other items whose value could fade quickly. Even when currencies didn't exist, gold was a global standard. A farmer in Mesopotamia could trade a gold piece with a merchant hundreds of miles away, and it would hold its value. That's how gold became a universal symbol of wealth, security, and influence, long before banks or stock markets existed. By the 19th century, countries adopted the gold standard. Paper money wasn't just ink on paper. It was backed by real gold in national vaults. This gave confidence to merchants, investors, and citizens alike. People trusted the currency because they knew it could be exchanged for gold. Economies grew, trade flourished, and countries with large gold reserves had immense influence globally. But this system had limits. Economic growth was tied to gold availability, which sometimes restricted flexibility during crises. Wars, depressions, or rapid industrial growth could strain gold reserves. Still, the gold standard created centuries of trust in gold's power as a financial anchor, and it cemented the idea that gold equals security, an idea that still resonates today. Today, gold isn't reserved for kings or central banks. Anyone can invest through gold coins, bars, ETFs, and even digital gold. Its price now depends on many factors: market demand, inflation fears, central bank policies, and geopolitical uncertainty. Gold is often seen as a safe haven, a place to store value when other assets falter. Investors flock to gold during crises, driving prices higher. But gold isn't magic. It doesn't generate interest like a savings account or dividends like stocks. Its growth is slower compared to high-performing equities, and short-term price swings can be dramatic. Many modern investors use gold as part of a diversified portfolio, a shield against uncertainty, rather than a standalone money-making machine. Gold has risks. Its price can drop unexpectedly. Physical gold requires storage, which costs money. Inflation doesn't always increase gold's value. And sometimes, holding gold can mean missing out on other investments that grow faster. Historically, gold's value has fluctuated. During the 1980s, gold lost over 30% of its value in a short period. Investors who rely solely on gold can find themselves stagnating. There's also the psychological trap. Many people overestimate gold's safety because of its history. Remember, just because gold has been valuable for thousands of years doesn't mean it will automatically grow your wealth today. It's protection, not a guaranteed path to riches. Diversification is key. Modern investors often combine gold with stocks, bonds, real estate, or cryptocurrencies. Each asset carries risk and reward, and spreading wealth across multiple types reduces the chance of losing everything. For example, during 2008, while gold held value, diversified portfolios with stocks, bonds, and cash rebounded faster. Gold can be a stable anchor, but relying solely on it may limit growth. Smart investors weigh opportunity, liquidity, and long-term goals. In short, gold protects, but other investments accelerate wealth. Think of it as a shield in your portfolio, while other assets serve as the engine of growth. If you choose to invest in gold, follow a few simple rules. First, diversify. Don't put all your wealth into gold. Second, research. Understand the different forms: physical gold, ETFs, or digital options. Third, avoid panic buying when prices spike. And finally, set long-term goals. Gold can stabilize your portfolio and preserve wealth during uncertainty, but it should complement, not replace, other investments. Using these strategies makes gold a useful tool for building security and steady growth. So, can you still get rich from gold? The answer, possibly, but unlikely if it's your only investment. Gold can protect your wealth during economic uncertainty, but combining it with stocks, bonds, real estate, or other assets improves your chances of true financial growth. Think of gold as a shield rather than a rocket. The real path to wealth comes from knowledge, strategy, patience, and diversification. By understanding gold's role and respecting its limits, you can use it wisely as part of a smart investment strategy. Protect what you have, grow carefully, and remember, no single asset will make you rich overnight.